Good morning, and thank you for joining us today. I'm Taylor Kambalda, a mining analyst at Red Cloud Securities. Today's webinar features EV Nickel. The company offers blue sky potential at its flagship over 30,000 hectare Shaw Dome project located only 25 kilometers southeast of Timmins. After listing in late 2021, the company has successfully completed 3 phases of drilling, expanded its land package by over 240%, and launched a clean nickel strategy. Drilling phases 1 and 2 were conducted at the high-grade W4 zone that resulted in the discovery of the W4 extension below the historical resource boundary. The phase 3 drill program resulted in the confirmation of the large-scale target at the Carlang A zone, with lower-grade nickel returned over broad widths. A maiden resource is expected for the Carlang A zone this spring. Today, I have with me on the webinar Sean Sampson, who's President, Chief Executive Officer, and Director, as well as Paul Davis, who's the Vice President of Exploration at EV Nickel. The format of today's webinar will be comprised of 2 parts. In the first part, Sean and Paul will provide an update to EV Nickel, as well as go over some of the more recent news from ongoing drilling at the Shaw Dome. In the second part of the webinar, we'll take your questions live, so please submit them using the chat function, and we'll get to them at the end of the presentation. And I'll note that you can type in your questions at any point throughout the webinar. To start, we'll handle the disclosures and then get into it. So for EV Nickel, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the EV Nickel corporate presentation located on the company's website. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for EV Nickel specific disclosures. So with that out of the way, I'll turn it over to Sean and Paul to update you on EV Nickel and what you have to look forward to.
Great, thanks Taylor. Welcome everybody, thank you for joining us. My name is Sean Sampson and I'll be running through this presentation with Paul Davis. This presentation is available on our website as well. So let me get us started. As Taylor mentioned, important disclaimer information. You can find this on our website. So let me just set things up. EV Nickel believes a few things. We feel as though there's not enough nickel in the world for the forecast electric vehicle growth. So the current market for nickel globally, it supports the stainless steel business, which continues to grow at 3 to 5% annually. On top of that, there's going to be this whole new demand section that's bolted on. The world doesn't have the supply that's currently known. By 2030, people think that EVs are going to be the majority of nickel demand. So that's something that hovers there in the macro. Second big thing that hovers in the nickel macro is that these EV companies, the battery companies serving the EVs, they require nickel with the lowest possible carbon cost. So the new legislation in Europe is very real. This is top of mind for car companies, and it's a new consideration for nickel miners because in the past, serving into the stainless steel business, carbon cost has never been a high priority. So we feel that nickel is going to be differentiated at some point soon across what the carbon cost per nickel unit it is. And then there's also complications that go beyond carbon. So there's the geopolitical on a number of fronts, plus there's ESG that is beyond just what your carbon footprint is. And because of this, buyers are coming up the value chain. That's something we'll talk about. So again, I don't go deep into the macro, but from our perspective, the growth in demand for batteries into nickel demand is quite staggering. And it really happens not just with Tesla that sort of steals so many of the headlines. It's all the car companies. As you stack up their announcements, it's quite material what we think the demand growth is going to be. Top right on this slide shows you how when you bolt on the new demand from batteries, even though you've got stainless demand growing with a good rate already, it's just a big game changer. Bottom left, pick your forecast. When you stack up where future demand is going in comparison to known supply, there's a forecast gap, which is a wonderful place to be for someone who's sitting on a lot of nickel like EV Nickel is. Then if you look at what the legislation is in Europe, and this is top of mind when you talk to the car companies, there is passed legislation that happened in 2022, which by next year, every vehicle sold in the European Union is going to be stamped with what the kilometer zero footprint is. Now, very clearly, if you go into a Volkswagen dealership and there's an internal combustion engine car and there's a battery electric vehicle car, the big difference in the kilometer zero footprint is going to be the footprint attached to the big slug of metal in there for the battery. This is top of mind for these car companies. So when you talk to them, it's almost like they're out in front of the typical nickel miners because carbon footprint is so important for them. And then if you think beyond carbon, there's just these guardrails that are coming in on the car companies. So it starts with general access, right? With the war in the Ukraine, it cut off Russia, which is the number 3 global nickel producer. If you look at number 1, Indonesia, number 2, the Philippines, almost all the money behind those investments are Chinese. And I have heard repeatedly in conferences where people talk about if Taiwan continues to heat up and that becomes like the Ukraine, then what's going to happen with the access to all that nickel? So when you take the Russian nickel off the board and potentially the other major countries, it leads people to places like Canada. So this issue of just general access is a real consideration for the car companies. And then you layer on top of that protectionism. So it's a wonderful thing, the Inflation Reduction Act out of the US, because what that did is it brought on huge incentives for electric vehicle sales in the US, biggest consumer market in the world, super. But what it also did is it put up walls around those electric vehicles needing to be manufactured in the US. Now, a tricky thing for the car companies is a number of these critical metals, primarily nickel, there is no material supply in the US. So they expanded out the borders for what qualifies as domestic production. So Canada qualifies under the Inflation Reduction Act as being part of the US. Great news. Not great news for car companies in other parts of the world, because in a way it puts up walls around the North American supply, North American and Australian and Korean supply. So the Inflation Reduction Act, just this general move towards protectionism, speaks in a way to the guardrails that are tightening. And then also when you talk to these new buyers, again, they're coming up with things that have never really been considered by miners before. So they have a huge focus on very broad environmental concerns, things like ocean tails and challenges in lots of other deposits around the world. That's becoming a no-go area for a number of these new buyers. Plus, they really want to get into the labor conditions and this idea of who actually owns the asset. So as they're wading into those ESG concerns, having something like our company does in a jurisdiction like Canada is wonderful, especially because that new demand is coming further up the supply chain, and they're looking to not just source, but partner with suppliers of the critical metals. So what we have is an enormous land package just south of Timmins. I'll show it to you. As Taylor mentioned, we have more than 30,000 hectares. We have more than 100 kilometers of potential strike, which Paul and his team are working on. And we have a couple tracks to potential development. Our first track is around a high-grade business, focused initially on what we call the W4 zone. So we have an historic resource. Paul will walk you through that in a moment. We discovered, as Taylor said, last year, our first big discovery was the W4 extension going down below our historic resource. So our high-grade business, we're permitting that now. We anticipate we'll be into production in something like 3 to 4 years. There's a potential local concentrator permitted and operating just 7 kilometers away from our mineralization. And that high-grade business is really set up to get going. Plus, we have another discovery to the south of where our project is. So that's our track one, our high-grade nickel mineralization. Our second track is what we call large scale. It's an enormous zone, over 10 kilometers long. We'll show you that. We've drilled the first 15% of it. We've come out with much of the assays. We're working on a resource on that. That's going to be big news in the first quarter. That's going to be an enormous nickel deposit, we anticipate. That grade is something like 0.25, but it's very near surface, and we'll show you how it compares quite favorably to other very large-scale deposits in the Abitibi around the Timmins camp. So that's our large-scale mineralization. And the really neat thing about that one, which we refer to as Carlang, is we feel as though it has incredible potential for carbon capture and storage, which in a way, we're going down a parallel path on that large scale project where it will be its own carbon capture project, which taps us into a whole new world of potential financiers and really gives us additional optionality on developing that low grade mineralization. So that's our track 2. That's the large scale, which we'll walk you through. And then we wrap together everything, including the carbon capture, other research and development we're doing around bioleaching, these things that are going to minimize our carbon cost. And we put it all together in what we refer to as clean nickel, which is a trademark term and a big part of our strategy. And frankly, it's the reason why we're doing this is because we are contributing into, we're supplying nickel for this global energy transformation. So our land package, as I mentioned, we're just southeast of Timmins, half hour's drive. Timmins is a wonderful place to be located nearby. Big population plus huge amount of mining services. And we're within 1,000 kilometers of Detroit. Where we are in Northern Ontario, it's fed by hydropower. That'll be a recurring component of our story. Everything we can electrify at our operations will have a very small carbon cost attached to it. So it's a wonderful place to be. What we have referred to as the Shaw Dome project down southeast of Timmins. There's an historic, there has been historic production where we are. There's a mill, the Redstone Mill, which is permitted and operating. That's owned by one of our investors. That investor also owns a high-grade project referred to as the Heart deposit. That's across the street, a few kilometers away from our high grade. So our track 1 is W4. That's in the southern part of our land package. In the north, we have this lower grade stuff. We'll talk about the Carlang A zone. That's our large scale track 2. Paul, why don't you get us started talking about the historic resource on Langmuir, the W4?
Sure. Thanks, Sean. I'll try and keep it brief for those of you who have heard it before. For those who haven't, W4 was a resource discovered in 2007 by a company drilling the ultramafics in the Shaw Dome, searching for Kambalda-style mineralization. W4 historic resource is about 677,000 tons at 1% nickel, a majority of which falls in the upper 200 meters. It's a unique deposit in that the sulfides are composed almost 100% of pentlandite, which should reflect a very good grade concentrate that we can produce from this particular deposit. And we're in the process of completing our metallurgical test work on that particular sulfides as we speak. Now, one thing to realize about W4 is that being a Kambalda-style deposit, being that most of the mineralization was in the upper 200 meters in the resource, these things are long-lived systems. If you can picture those lava rivers in Hawaii as it's flowing away from Kilauea, you get this kind of meandering stream. That's what these look like, and they continue on at depth. And we see similar things at other deposits in the Shaw Dome, where the redstone's been defined down to about 750 meters, Heart's down to at least 500, Langmuir has been hit down to about 650 meters. So these things are long-lived systems. We believe we only have the upper part, and there's a chance to keep tracing it down, as proven by the drilling that we did. Here's some picture of a core that we got in 2021, showing the massive sulfides in W4. That particular sample graded almost 18% nickel, but you can see the pentlandite is that light gray, flashy silver mineral within that sulfide. Here's drilling that we completed as part of our phase 2, which was testing down plunge of the earlier historic resource. And several important issues here. We drilled it from the north, so we're hitting at a much better angle. So those widths that you see are closer to true width. They're still yet to be calculated, but we hit it at more 90 degrees. Secondly, we proved to ourselves that the actual W4 zone represents one single horizon. So it's a continuous type of mineralization, which is going to have the benefits of, one, increasing our continuity of the actual resource. So we should see some type of improvement in our resource tonnage, as well as it's going to help with the grade. It's going to help to increase the grades as we continue tracing it down. As you can see from the drilling, this is our section 450 east. We drilled 500 east. We hit on all 3 of those holes as well. We're looking at going into a phase 4 program, starting drilling in the next few weeks. And we're going to be testing section 550. If that one hits, we'll move on to 600. So we see a lot of potential to increase the size of that extension with our further drilling.
And Paul, the potential here with the other high-grade mineralization across. Now, there's been historic production on the Shaw Dome, and you want to talk a bit about your sort of prioritizing targets?
Sure. Like as Sean said, there has been historic production on the Shaw Dome from 4 of the known nickel deposits, including Langmuir 2, Langmuir 1, Mickwaters, and the Redstone. So it's a known nickel camp by any definition. Now, past exploration has really been on a patchwork of property ownership up until it was combined under Liberty Mines in the late 2000s. But you can see here, they discovered a new zone in 2004 on the Redstone trend, which is called the Croxel Zone. Again, it's high grade. It was about 1.6% nickel over close to a meter. But also at Langmuir number 2, which is a property that we own the down plunge extension of, the mine was stopped at about 400 meters depth. But there were drill holes below that showing significant intersections of nickel back in the 1970s. So we know that trend continues. There's other zones of nickel mineralization associated with the Langmuir trends as well. W4 represents the next horizon up. There's 3 horizons with high-grade mineralization. W4 is the 3rd horizon, and that is relatively unexplored for that type of deposit. And so we see a lot of potential to expand the high grade at the Shaw Dome. Here's a nice 3D mag map of the Shaw Dome, completed from VTEM surveys that were flown by both Golden Chalice and Liberty. You can see anything that is yellow, red, or purple represents a mag high, and most of these are associated with your komatitic flows. You can kind of see this layer cake features. Langmuir number 2, you can see there's a zone there that's high magnetic response. Also, W4 is associated with the next band of high magnetic response. And then our Carlang and Adams Eldorado trends, which are the large-scale projects, also show up as these really nice high magnetic features. So exploration here is fairly straightforward. Geophysics works great. Our biggest problem we have at the Shaw Dome is not a lack of quality targets to test, is that we have so many and we have to prioritize them and drill them in a systematic way that will test each one properly, ensure we don't miss something.
And Paul, we've mentioned Kambalda a few times. Lots of companies talk about Kambalda targets. You worked there for a period of time. Do you want to just talk about how what we have compares to what you know is down there?
Sure. Basically, if you take the Shaw Dome and Kambalda, they are really analogous in terms of both the type of rocks, the age of the rocks, and the style of mineralization. Kambalda, the figure on the right, represents a very restricted area in Australia that they've mined about 51 million tons, grading 3% nickel since the 1960s. What I'd like you to take away from that particular figure is that red zones represent all the ore bodies within the Kambalda Dome, but that is one stratigraphic horizon within the Kambalda area. So once you find one nickel deposit associated with a horizon of these komatitic flows, the chances of finding other deposits goes up significantly. If we then transition over to the figure on the left, looking at the Shaw Dome, that dashed outline box shows the same aerial coverage as the Kambalda Dome, and you can see that there's 4 known nickel occurrences within it, 3 of which were mined, so it has a lot of similarities. We're going to be focusing our efforts on looking for these high-grade extensions, as well as testing new projects in the different layers within the Shaw Dome, and I can see that since we've already found someone, there's already 5 known occurrences. Finding more and more is going to become quite attainable.
So it's neat. We've put the package together for the first time. It's all been under one umbrella, and it hasn't been methodically explored. And we think it could potentially be like the Kambalda in Western Australia. Again, lots of companies say that, but very clearly our geology lines up. And I'm really excited about the fact that it's been underexplored. So that's really a big part of our story. So Paul, do you want to talk a bit about Groves, which was exploration we did on a land package we have to the south of the Shaw Dome?
Sure. The Groves project itself was worked by Liberty Mines back in Northern Sun back in the mid-2010s. Basically, there was a known historic nickel showing there called Eveco, which had been drilled off in the 60s and 70s. It was fairly small. It was really more of a mafic volcan or mafic intrusive type hosted. So you had nickel grades that were similar to copper grades in around 1%. In 2015, the Geologist for Liberty went out and looked at the area as a whole, and they found the Matthew showing in 2015. It was a number of sulfide boulders. They dug it down. They thought they had hit the bedrock, but it hadn't really truly been stripped. They went in and drilled it, and they really identified this Matthew zone as a new area. You're seeing some really interesting hits there, like 3 meters of 1.87% nickel with 0.75% copper. So you're seeing a little bit more byproduct credit in this type of mineralization than, let's say, you see with the Kambalda style, which is almost entirely nickel. And this has really been underexplored. Access to this area was minimal for decades. You could go a helicopter, but now with active forestry operations in that area, our opportunity to get in and explore it in more detail and really look at this project as an add-on to our high-grade Shaw projects really has a lot of potential.
And last summer, we did the channel sampling, and we were down there doing the work, Paul, and we confirmed that it goes down into bedrock. So it's not just the boulders, right?
Yeah, we opened it up, and we were able to see the nickel copper mineralization in bedrock with that work.
So that's Matthew down to the south. That's our track one, the high grade. So high grade mineralization. If we shift over now to track two and our large scale targets, we're going to talk about areas of our property which is to the north. So starting with Adams Eldorado and Carmen Langmuir. So when we look at these two areas, so we've got them both stacked up here on the screen, showing their mag highs. This was the first step for our exploration, looking at the detail around the magnetic intensity. We're going to now introduce the idea of Canada Nickel, our competitors up in the Timmins camp, with the Crawford main zone. And we have drawn on this slide that oval in the bottom left. That is to scale the size of the main zone from Crawford. And you see the size of that oval as compared to the mag highs in these two areas of mineralization. It looks very interesting. So zooming in now on Carlang, that's the area in our northeast. So this is the Carlang mineralization. This slide shows you a few things. One, it stacks up and shows how we have about 10 kilometers in sequence up on the Carlang. And there's been significant historic grab samples that have been done. So sampling from surface with very good grade. As we mentioned there, 40 samples on the top half at 0.33. And again, on this slide, we have the oval representing to scale the same size as the Crawford main zone. So the neat thing here is it comes to surface. Surface sampling has been done. You'll hear us repeat this. With the outcrop, we think that's a differentiator for this type of mineralization because the access to the stuff, if it's covered with overburden, that has a significant economic impact on your potential to develop and mine the thing. So Carlang goes for over 10 kilometers. We've chipped off the first 1.4 kilometers for what we call the Carlang A. And this is the phase 3 drilling, which has been completed last summer. And we're just about to finish off coming out with our assays on it. Yeah. Paul, do you want to run us through what we've learned so far on the Carlang A zone?
Sure. What we've learned on the Carlang A zone, really we have advantages over other exploration groups with this outcrop exposure. We can really correlate our geophysical anomalies with the outcrop exposure, and we see that they line up really well, and we can define the strike length of these dunitic bodies. Our phase 3 drilling, what it really did is it showed that we have the dunitic body from the south to the north. Every single hole within our phase 3 drill program hit the host body for our Carlang A zone. Now, we only drilled it down to a 250 meter depth, and that was a strategic decision because we understand it goes to depth. I was working there in the 1990s, and I drilled just to the north of this area with Outokumpu and hit mineralization down at around 500 meters depth. So we know it continues, but when you're looking at an open pit, like, having a depth of 250 meters is much more workable than going down 500 or 600 meters. Plus, we have 10 kilometers of strike length, so we could expand it much more easy just by going laterally versus going to depth. You can see here our hits are quite good. Like, EV44, which we just announced last week, hit 200 meters of 0.27. Basically, it bottomed in, or It has mineralization throughout the hole. 43 hit 298.7 meters of 0.27. That hole ended in dunite, so we know it continues below that. Hole 42, 0.22 over 199. But again, that hole bottomed in dunite, so we didn't test the full depth of it. And we actively are working with a group now for that phase 3 Carlang technical report, which will be the inaugural resource estimate for this zone. And I'm really looking forward to what those results are going to be.
So Paul, as our drilling is now coming back on phase 3 and we're getting an understanding of how big this Carlang could be, we need to start comparing it against other very large deposits up in the Abitibi. So you spent a huge amount of your career up there. How do you think these stack up in the Timmins camp?
Well, with my career being stretching over 30 years looking for nickel in Timmins, basically I've tested a lot of these zones. And I have to say what you're seeing at Carlang is not an uncommon occurrence, but really there are 4 characteristics for Carlang which I think separate it from the rest of the targets up in the Abitibi. The first is proximity to processing. Excuse me. Carlang, it's located in the Shaw Dome. It's about 25 kilometers south of Timmins. Timmins is an area that has had many of these very major projects. They had the Kidd Creek mine, which is about 125 million tons that's been processed. They've also had the Hollinger mega pit, which is going now for Newmont. So they're used to these large scale projects, and I see that as being a real opportunity here at Carlang. One of the big differentiators is our ability to drive to the drill site. Recent forestry operations have opened the area up. They've built a network of gravel roads, and we can drive a pickup truck to our drill location. Much of the rest of the Abitibi hasn't had that type of development, and you still have to get in using swamp buggies or helicopters, which really is an extra challenge to the exploration programs and any development program that you're going to be developing. Overburden depth, another huge advantage that we have up to 15 to 20% outcrop exposure, so we know exactly the rock types, and we know we can see them, we can stand on them, and Taylor can tell you after we finish the presentation how we stood on them. But we figure that the average depth over the Carlang A's area is less than 8 meters, and I wouldn't be hesitant to say it's probably going to be about 5 or less meters. So it's really right up to surface. The other deposits within the Abitibi are generally covered by over 20 meters of overburden. That means that you're going to have to spend that amount of capital and that amount of time to stripping the overburden even before you start mining. Whereas at Carlang A, you could be right into it within the first few months, knowing you can start on outcrop. Third thing, depth of mineralization. They are expanding their resource by going to depth. We can have the potential to expand any type of resource we come out with by just testing laterally on that remaining 8.6 kilometers of strike that we already know has dunites from surface outcrop exposure, as well as some limited past exploration that's been completed with diamond drilling since the 1960s. So really, I see a lot. These characteristics are going to decide which one of these projects advances and which ones don't.
Yeah, so this is the exciting thing. When we get that resource, that starter resource on Carlang, we'll be able to then start comparing them. And frankly, when you get into the details, for the reasons on this slide, we don't think they're apples to apples. That bottoming and dunite point that Paul made, that we could have gone a lot deeper if we so choose, just speaks to the greater size of the potential resource. So we'd encourage investors to really keep the ideas on this slide in the back of their minds when we start comparing assets versus assets. So to sum up here, we believe these things about the nickel market. We're nickel bulls. We have an enormous land package with a huge amount of exploration potential. We have the 2 tracks for potential development. We're wrapping it all together in the clean nickel strategy. Last year was the year of discoveries. So we made 3 discoveries: the W4 extension, down on Groves with the Matthew zone, and then this Carlang A zone. It's very exciting. The company as a whole, we have the track 1, which is that high grade, starting with W4, which we anticipate will be up into production in 3 to 4 years. So near term, we're permitting that now. We have the potential for processing very nearby with a plant that was permitted and exists, which is a big step forward. And we have that opportunity for very low carbon cost nickel production. Then our second track is really a dual opportunity. We have the integrated carbon capture and storage project with a huge amount of nickel production, clean nickel production, starting with Carlang. So the potential for carbon capture and storage, we're just starting to work on that now. We think it's enormous. And then we have this potential for a very long life asset, which again, we've drilled less than 15% of it, and we're hoping to come out with a resource soon on that. And I hope that folks will see that this really is a generational opportunity. So last year was the year of discoveries, as mentioned. Now we're into the year of seeing the details. So in the first quarter, we plan to come out with our new resource on the Carlang A zone. So a new maiden resource. Alongside that, we intend to come out with our initial results with numbers on the carbon capture and storage. So that's around our large scale, starting with Carlang. Then second quarter, so later in the year, we intend to be coming out with an updated resource on W4. That's the high grade. Now we're drilling that starting in February. We're getting in for more holes. Paul mentioned at subsequent horizons in that extension. So if that goes really well, that'll be great news. We'll come out with the assays, and maybe the resource creeps a little later in the year. But what we're shooting for is a second quarter resource on W4. And alongside that resource, we'll start coming out with information about our bioleaching results, which is really interesting. We haven't spent a lot of time speaking publicly about it, but we spent a lot of time in the lab working on it. And that's around applying bioleaching potentially to concentrates that come out of the mill, and it means we wouldn't have to deal with a smelter, which gets very interesting for having a small contained production operation where we're actually selling nickel sulfate from our site. So that's exciting. That'll be second quarter news. So we've got a big year. If I look at sort of how we've performed, this is the sad part of the presentation for people who are holders of the stock like me and like Paul. It's great news in terms of opportunity. So if we stack up sort of what happened in our stock over the past year, we've done great things in the things we control around what happens to the business. And what we did last year is, as we have on the slide, we tripled our land package. We made the discovery around the W4 extension. We made the discovery about the Carlang A zone. There was a blip in terms of our trading where we came out with some high grade results, but they were off of metallurgical sample holes, which we said in the news release that we were drilling into the core of the W4 ore body. Stock popped around that news. But generally, the ski slope of our chart over the past year, this really speaks to the current opportunity in the stock. So capital structure, again, we have traded right down, sitting around 11, 12 cents. What that means is $6 million equity value applied to the company. We have just over 50 million shares. It's relatively tight float and relatively tightly held as well. So the founding group, in conjunction with the company that vended the asset to the new company, EV Nickel, Rogue Resources, those two between them control about 17 million of the 51 million shares. We've done rounds of financing at 11 cents. Each of those rounds of financing are underwater. In terms of insider ownership, management and board holds about 5%. Broadly defined friends and family is about a fifth of the stock. We have warrants outstanding, but they are well out of the money at this point. We've got a couple $1 million in the bank as well. We did a financing at the end of last year. So we're cashed up to do the work we're going to do. We're just trying to tell the story as broadly as we can, because we're putting lots of value into the business based on having done the land deal last year, having made these 3 discoveries. And this year, again, we're going to come out with these 2 resources we intend in the first half of the year. So hopefully this begins to build traction. But this should represent a tremendous opportunity for new eyes coming into the stock. I should note as well, trading down around 11, 12 cents. Red Cloud rolled out coverage. Taylor visited the site, has been all through all of our internal information, and his price target is 90 cents. So it is seen that there's a lot of potential upside here. And this, again, is the year of us putting details out into the market, and hopefully we begin to turn this around. But right now, I know that everyone says that their stock is is undervalued. There's no mining CEO, especially no junior mining CEO, who comes to the market and says their stock is overvalued. But I think when you take our current valuation and really compare against other companies in our space, so there we are at 6%, and we have these two tracks. We have the high grade and the large scale. If you compare us to a high grade only company, like the Alexo Dundonald, which is in class 1 nickel, neighbors of ours up in Timmins, Paul discovered a big part of the zone that contributes into the Alexo Dundonald. They're worth more than 3 times as much as us. We have an enormous land package. We're just getting started on finding the nickel. They have a much smaller land package. We know the mineralization well. And based on the exploration they're doing, we think that they're probably sort of done finding what they're going to find in their land in Timmins. But still, they're worth 3 times as much as us with our potential on the high grade. Then if you look at companies that have been front and center with the low grade deposits, you have FPX out west, about 100 million equity value. Their story is based around much lower grade mineralization than even our large scale assays are coming back. And alongside that, we have the high grade business. Then I spent a bunch of time in this presentation talking about Canada Nickel. They're worth a couple $100 million. So many times multiple of us. They have the same low grade mineralization with Crawford. We spoke about how we think of their size versus our size. They have other low grade mineralization scattered around the camp. They certainly don't have 10 kilometers in sequence at Crawford as we do with Carlang. They've also pivoted just before Christmas to pick up some old historic high-grade mineralization, which we know well, which we had looked at, Texmont. So perhaps, as I note here, they're also shifting towards a 2-track strategy. That's where we are, and I think we're a pretty clear comparable, but certainly not around where the market is valuing them currently. And I've got my eyes open here that we've got a stock listed for over 400 million equity value. But what Talon has down in Minnesota, I feel as though Tamarack, we may have that type of mineralization across our hugely prospective land package. And I'll certainly tell you, if we discover something that looks like that, I'm much more comfortable permitting it in Ontario, in Canada, with very supportive levels of government. And in the Timmins camp, we could get permitted. So, Talon is what I want to look like with our high-grade mineralization. And I think the chance of us setting up a complete business in the Shaw Dome is a much clearer path than it is to be done in Minnesota. So, again, everybody says the same tune. Their stocks are undervalued. I genuinely believe, though, when you begin to compare us against market comparables, it shows that we're deeply, deeply undervalued. And this is part of, and I'd encourage people to take a look at the Red Cloud research. This is part of how Taylor sort of stacked us up against the others and saw the deep value. So that's it, Taylor. That was our quick run through. If you want to shift over now to Q&A.
Yeah, sure. So thank you very much, Sean and Paul, for that great presentation. Just a note on the initiation report. I put that out beginning of last week, so it's nice and current. In that there are some pictures and a recap from the site visit when I was up there at the end of the summer. So there are pictures where you can see the rock outcropping right at Carlang. So to back up Paul's point there, that very little overburden is there. So, definitely encourage you to check that out on redcloudresearch.com. So now we'll turn to the Q&A portion of the webinar. And just a reminder to everybody on the line that you can type in your questions into the chat and we'll get to them. So to kind of start up, maybe, right at the end of the presentation, you mentioned bioleaching. What partners do you have on that work right now, and kind of maybe tying that into the clean nickel strategy? How are you advancing that? What partnerships do you have? Are there suppliers you're working with, and what's the plan on that front this year? And is there going to be a focus on building that aspect up of the business as well?
Yeah, I'll start, then I'll hand off to Paul for the technical. So in terms of partnership, we have been working with an Ontario-based group called EPCM, who is helping coordinate our research and development, and then also subcontracting to a lab called RPC, who are really sort of world leaders in this space, base metals, bioleaching analysis. We have bred the bugs using our native water and soil samples, and we've been doing work in the lab. And this year, the intention is to come out with an update in second quarter alongside our new resource for W4 to talk about how we could potentially bioleach that material. Specifically now we're doing work on the concentrate when it potentially comes out of the existing concentrator. Paul, do you want to talk about the technical nature of the bioleaching?
Sure. Bioleaching has been around for a very long time. It's been active everywhere. I think you see a component of bioleaching even in your copper SXEW, where you're getting more copper out of the heaps than would be traditionally thought of if you just exposed it to acid. I've been in this now for probably 12 years. Started out doing it with another group, testing materials in Australia as well as in Sudbury. And really, it is going to be the next phase, I think, of nickel processing in the world, as well as in Ontario, I hope, being able to supply your battery companies, your gigafactories with the products that they need. Now, what's really interesting about bioleaching is to heap leach it, it can be very costly in terms of your acid consumption, but we're looking at doing it more in a tank or a contained vessel that will be at atmospheric pressures and elevated temperatures. The thing is that we'll be able to tailor the end product that we produce from the liquor based upon any type of customer needs. So it could be a sulfate, could be an MHP, the mixed metals hydroxide. You could even precipitate out a nickel sulfide, which then could be processed down at a traditional smelter. But really, it does have a much smaller environmental footprint, and it gives you the option to capture more of the value chain of the nickel for the company, not transferring it off to the smelter. Like, the old adage is the person that owns the smelter owns the camp. So
perfect.
Yeah. So just being able to jump over that step and have the potential for nickel sulfate to leave the Shaw Dome, our site, is hugely interesting, especially to the new buyers of nickel, the EV companies and the battery companies working with them.
Perfect. Okay. So we have a question that's come in here. I'll just read it out. Does the two-track strategy turn into a pair of companies at some point, or do you plan on selling assets? Capital appears to be limited, so doing both appears to be a difficult path forward.
Yeah, I'll answer that. So we're doing what we're doing. We're advancing the two tracks to try to figure out how much value we can add to both. Obviously, they're in different leagues. When we're talking about the potential to develop these high-grade deposits around the Shaw Dome, potentially working with the local concentrator, that is sort of one league of nickel company. If we're going to be talking about a 500 million ton resource, and that being 1/8 of what we might have up at Carlang, and then on top of that, Adams Eldorado, that is very clearly a different league, where to get into that sort of processing, that becomes a big boy business. That said, we are going to continue to advance both and continue putting meat on the bones for both to try to set us up for various options. So your question's a good one. It may become an opportunity across a couple companies. It may require some sort of partnership. It's very clearly, especially for the large scale business, when you look out to potential CapEx and that, it's tricky to say with a straight face that a current 6 million equity value company would be able to pull that off. But what we're doing is we're going into both with our eyes open, trying to advance them along as far as we can. And I'm confident that at least that high grade business is the sort of thing that even team wise, we can pull off because we have before. The large scale, we've both been involved in large scale projects before. That likely looks like a different sort of company. If I become my junior promoter, maybe I wave my arms and we grow into that. But we've got our eyes open that those are very likely different businesses. But I'm comfortable for at least the next couple of years that in our size company, we can continue pedal down and aggressively moving both of them along.
Great. Okay. And then just kind of building on that, what sort of goalposts have you been communicating in terms of what to expect for the upcoming W4 resource in terms of pounds?
Yeah, so we clearly need to do the work still, and W4 is one where we're just doing more drilling as well. Paul, do you want to talk a bit about your target for the updated W4 resource that we hope to come out with in the second quarter?
Sure. The historic resource already contained about 14 million pounds of nickel. And so really from the drilling that we've done, our estimates, I'd be comfortable to say that we're going to see anything between a 75 to 150% increase in the nickel pounds in any type of updated resource. It could be more depending on the results of our phase 4 drilling. That's yet to be seen, and we should be starting to see some results from that in the next 6 weeks or so.
Great. Okay. And then, just in terms of strategy, you've got these 2 updates.
Sorry, hey, Taylor. And the other question was, I think that question was asking about both the high grade and the large scale.
Yeah, sure. You can talk about that.
Yeah. So on the large scale, Paul's mentioned this before publicly that, again, we've done the drilling. We're waiting for the final assays. We're pulling those numbers together. But something in the 400 to 600 million ton with a 0.25 grade, that's sort of our target. We've talked about the Crawford main zone, which in terms of footprint reflects what we've been drilling, but of course that goes almost 3 times the depth. So it's going to be a big number, we anticipate, with hundreds of millions of tons of potential 0.25. Where it's the first 1/8 of that mineralization up at Carlang. So in terms of nickel pounds, people can do their own math. We're doing the work now, but when we come out with it, it's going to be a big number.
Great. Okay. And then just building on that, I guess you've got the 2 updates coming. The large scale one should be this quarter, high grade update next quarter. What, I guess, is the plan after that? Like, would you go to a PEA that includes both, or would you look to maybe identify and get, a resource on some of these other high-grade targets that you've identified before putting together a PEA? Have you thought about sequencing after these updates?
Yeah, I think about them as the separate businesses, right? So we'll have a resource at hand on both. In the high grade world, I think if there's 700,000 or a little under 700,000 is our current historic resource, maybe Paul doubles that. That gets us, if we're running perhaps at the local plant, which takes about 700,000 tons a year, that's a couple of years of supply for that plant. If we can then figure out, based on drilling where there's other targets, other high grade targets, I'd like to be able to put a business together, which is multiple years of that sort of mineralization, that sort of ore supply. So that's the high grade business. We would likely try to pull together more resource and then advance that more resource towards a high grade PEA and PFS. That's the high grade. The large scale, we anticipate, after having drilled 15% of it, having a big number with our preliminary resource. We've then got to choose a path as to whether it makes sense for us to shoot more holes along the mineralization and come out with a confirmed enormous inferred resource where we're saying it's 10 kilometers based on what we know about the geology, but we could put some more holes into it and put some more meat on those bones and have that story of an even bigger resource of near surface 0.25 range mineralization. That could be an option, or we sort of gallop ahead with advancing off of the A zone with a resource in hand, moving it to the next phase, PEA, PFS. But we'll sort of figure out where we're at with people's interest in that resource. So I'm not sure if you come out with hundreds of millions of tons in a 0.25 resource, if saying it should be 8 times or doing drilling to say it's 8 times the size. I'm not sure if that's beneficial, or if people want to see more detailed on the project for PEA or PFS. we can go down those paths. We'll have options. But the first thing is to get the resource out, and then we'll figure out how we advance that. But I think of them separately, Taylor. I don't think they'll be in one combined project study.
Okay, great. And then, maybe just it'd be good just to give an update in terms of permitting and work on that front. If you started any environmental baseline work and kind of what, if that's something they're going to be looking at in the upcoming years, both permitting for the drilling that you have and the, larger permitting down the road, I guess.
Paul, do you want to run us through that?
Sure. I'll start with the drill permitting. Basically, at Carlang, at W4, those drill permits are good for 3 years, and we have those in place. And phase 4 is incorporated in one of those drill permits. We filed another permit for a target that's to the west of W4, which we should be receiving here in the next couple of weeks. In terms of environmental baseline work in Ontario and for Environment Canada, you need at least 4 seasons of environmental baseline. And that includes water samples, discharge rates, things like that. And we have initiated that work. We started it about 6 to 9 months ago. So we're in capturing that. And they had actually done some preliminary work back in 2009, 2010, already establishing the reference samples so that it's a much more complete process and that we will have all of that information in hand.
So we think we're about halfway in on the baseline sampling, Taylor. And we've applied now for our mining lease, which is the next step for the W4. And that, with the combination of those, that's how we talk about the 3 to 4 year timeline as our potential for getting production.
Perfect. Great. Okay. So I think we're just out of questions now, and we're coming up on the hour. So I'll give you kind of the last word here, and if there's any final questions that come in the next minute or so, I'll throw them at you. But if not, we'll wrap up. So I'll turn it over to you for the last thought.
Great, thanks, Taylor, and thanks everyone for participating as well. So we're very open. We're always accessible. Take a look at our website. You can see more detail about the things we touched on here. As mentioned, last year was the year of the 3 big discoveries. This year is the year of getting more details on. And we're really excited to have the news flow over the next 6 months, which includes that preliminary maiden resource on Carlang, the large scale. Plus, we're going to come out with a bunch of information about the carbon capture and sequestration, the potential for that around the carbon storage. And then we're going to shift over, we hope, with news around our W4 drilling, which will all lead to an updated W4 resource. And then interesting feedback from the R&D we've been doing around bioleaching. So it's an exciting year ahead for us, and we look forward to growing your company. Thank you.
Great. Thank you very much, Sean and Paul, for presenting EV Nickel to us this morning. And, thank you to everybody on the line for tuning in with us.
Thanks, Taylor.
Thank you, Taylor.